Yeah, no, it's interesting. I think after the leak that happened yesterday, I feel it is going to be more towards the dovish hike. It feels like that's where the ECB, obviously, some people at the ECB obviously weren't particularly happy with the market pricing on Monday, and obviously we had that press report. It does feel they want to hike, but when you look at the economic data, it does smell of a possibility of policy mistakes, and I think they want to be clear around the fact that we are seeing weakness.
It is quite extraordinary that news report came out, and if they do actually end up hiking, it would be a surprising turn of events, because before that article came out, the market was leaning towards no hike, and obviously now the market has substantially repriced just on back of that one article. So obviously that's going to be key. But what does that tell you about the state of consensus building within the ECB and the fact that they felt that they had to take it to the wire very last second, do this what could be quite informative leak?
I mean, if you think, though, over the last couple of weeks or so, we have had a number of hawkish members of ECB coming out and saying that there was probably still the opportunity to raise rates, but the market was obviously ignoring that somewhat. As you said, it was still more likely that we were going to be on pause. I think actually the reality, though, is if you think what the market had been pricing, it had been that 4% or so terminal rate. It was just whether it was going to be this meeting or the next meeting that they were. And actually the market hasn't really shifted that terminal rate. It's just brought that hike forward now to today. And actually the reality is the data is probably going to continue to a little bit worse. So maybe if the ECB do want to get a hike in, now is the opportunity, because the data might be pointing that it's going to be a bit more challenging at the next meeting.
What would a policy mistake from the ECB look like at this stage? How do you think about that?
I think are we seeing, inflation's coming down? Is it coming down quick enough? Obviously the ECB have got that single mandate of keeping inflation under control or keeping price stability. And when you look at the growth side of things, which is the luxury the Federal Reserve has, where they can take that into account, PMIs, they're looking pretty horrible at the moment. Services, manufacturing, the complete composite, all in the 40s. It's not a pretty picture out there. But as I said, the ECB have got that single mandate. They have got price stability, and at the moment, prices are still too high.
And when it comes to the terminal rate, after the Reuters article yesterday, have you changed your view on where rates will ultimately end?
No, and I think the market hasn't either. And I think we'd always been saying that if they paused, it was likely to be a hawkish pause. If they're going to hike, it's more likely to be more of a maybe dovish hike. I think the other thing, though, we have to be clear of, they can't be too dovish. We've seen that with the other central banks around the world, that the first signs of the pause and then maybe the reversal or the pivot, and the stock market and the equity market and the risk markets are going to do particularly well. And that's probably also not what central banks... Yeah, so it might not be that dovish. But I think actually the risks, if I look at where pricing is today, I think the risks are probably for more of a dovish interpretation, and maybe it's a good environment to be owning European fixed income today.
That was going to bring me to my next question. What do you think happens if they do go for a 25 basis point hike today? Do we see further flattening of the curve? Is this what you'd anticipate on back of that?
I think it's all going to be around the press conference and the messaging we get, and if we do get maybe a dovish message, then I think we can see bonds rally. We've seen a little bit of underperformance of Europe over the last couple of days with the repricing. We have seen that flattening. We have seen the front end move a little bit higher, but the terminal rate to me doesn't change. It's still 4%, and I still feel that the economic cycle is turning. We're late cycle in Europe. We're getting towards the end of central bank hiking everywhere, and it's still an opportunity now to be looking at the bond market and saying that yields are at the highs of where we've been over the last decade or so, and it's an opportunity to be considering it.
Well, the next question then, if you see the terminal rate at 4%, no change, despite the adjustment that we had come through the leak yesterday, what will justify a rate cut from the ECB, and when do you think we could start to see an actual loosening of monetary policy?
I think that's going to be the more challenging question, and it goes back to, I think the Bank of England have described it quite nicely as this tabletop mountain relative to the Matterhorn. Are we going to see that really long pause? I do think for a central bank like the ECB that has that single mandate of price stability, we are going to need to see prices come down. I think that was what the key takeaway that people took from the article yesterday was, still with 3% inflation at the end of or north of 3% inflation at the end of 2024. That's just not enough. You're going to have ECB forecasts pointing quite clearly that they are going to be able to meet their 2% mandate before we really get them cutting.